Welcome to Fintech What the Heck. I'm your host, Andrew Carpenter. This is the podcast all about fintech and the future of data. Today, I'll be talking about the essential data that fintech startups need and interviewing Intrinio sales engineer Alec Isaac about bridging the gap between sales and engineering. I'm going to ramble today about essential data for fintech startups. And before I dive into that, let me frame it a little bit. So there are lots of different types of fintechs out there. There are fintechs in the banking space, fintechs in lending. They're all over the place, and they do all kinds of things. And I tend to think about fintechs as being investment focused because that's what I do, and that's what Intrinio does. Is we help provide financial data to fintechs that they're building into applications. So I'm a little bit biased, and I'll just get out there and admit that, like, if you're a banking fintech, there might be some different data sets that are essential for your startup than what I'm going to talk about today. So I'm talking about data that fintech startups need, and specifically the fintechs that are working in the investment space. And so the most there's basically the most common thing that we see, and we have 1,000 clients, have had, and worked with thousands and thousands of these fintech startups, is that they almost always have a secret sauce. Like, you can go out and recreate Yahoo Finance, great. Maybe you'll do a little bit better, but you're not going to displace Yahoo Finance or make a lot of money. You need to do something different and special. And most of the fintech founders that I speak with, you meet some of them on this show. We talk to dozens of them every week. They know something. Maybe they have an algorithm or a way of analyzing a portfolio or risk or an idea for something special. And that's cool. Nobody else has it. It's very unique to them. And the kind of data that is needed for that special thing is probably going to be custom. Whatever it is, maybe you have to go out and source it and find it. And we've been amazed at some of the things that our clients have created over the years, and they're using that special sauce to differentiate themselves. And I can't really anticipate what that is, because if I knew it and everybody else knew it, there would be nothing really special about that fintech startup. So they go out and they build this special thing. And then immediately what happens once they get some traction and people are like, oh yeah, I can get this certain piece of information from your app that I can't get anywhere else, or maybe it's a social a tool that nobody else has, and it's great. Okay, well, now you need to increase engagement and get people to stay on your platform for more than just that reason, to give them a reason to come more often, to use your tools, maybe to buy something. And so you, as soon as you have in the financial investing research space that special secret tool available, now you need to add all the other research that goes into trading and building portfolios and investing. And most of the trend in the last year has been around building these research tools, and we talked about that with Yuli on the podcast recently, is that we want to get, everybody's trying to get these professional grade tools into the hands of investors. So if you want your platform to speak to the everyday investor beyond just your secret sauce, you want them to come and learn and do more research, what are the types of data that you're going to end up adding to your platform? So let me just run through a list of these general ideas of data that you're going to want to add. And usually what's happening is they're added along with your secret sauce to give more information, more context, more about what it is that you're teaching your users, the information they came to get, what they came to learn about, the research they came to do. So the first thing I'll mention is stock prices. This is super ubiquitous. Like, everybody who's investing, everybody who's a retail trader needs to know stock prices. It's pretty much across the board. And we have a whole section on the podcast in an earlier episode dedicated to that. So check that out. But this is just like what the cost of a stock is today. Is it up? Is it down? And you can get that data from Intrinio or any number of exchanges. So I suggest you check out that podcast. But the most frequent data set that we get asked for at Intrinio, and that almost every investing site has, is stock prices. It's a very complicated thing, but at the end of the day, it's just if I'm doing research into a company that I'm considering buying, and the same is true for ETFs. ETFs have a price attached to them. You're going to want to display how much that is up, how much it's down, its historical trend. Usually folks put a graph. You can do a candlestick chart, anything so that an investor can say, all right, what is the stock price right now? What was it yesterday? What was it a year ago? Can I see a graph? Is it up? Is it down? And that is like the first thing that folks will try to add, is because it's updating all the time. It gives the user a reason to come back to your platform, and it gives them that context for like, is this a good investment to make or not? And I mentioned ETFs, so you got to have ETF prices. That's basically included in market data with stock prices. But you might also be interested in mutual funds. That has been getting smaller, but it's still many, many billions of dollars of mutual funds are held in folks' portfolios, and those have net asset values. And then I'll give an honorable mention to crypto. Intrinio has provided crypto over the years, and then it kind of waned, and now it's back. All of a sudden, everybody wants crypto in their portfolio, so that can be a really nice way to differentiate yourself as well. After you have stock prices, the most important data set that a fintech startup needs are fundamentals. They're called fundamentals because they are that important. They're essential. They're fundamental. These are the balance sheets, income statements, and statements of cash flows from the publicly traded companies that your users are doing research on. So once you get the stock price, and maybe you've applied your special algorithm and given some unique information, to do due diligence and research into a company, you want to know what their earnings were, what were their expenses, how many employees do they have. You want to be able to see that stuff over time historically, and that all is mandated in the United States to be filed with the SEC. And I actually had a call today with a stock exchange in another country where that kind of data isn't mandated to be collected, and it actually poses a big problem because if you don't have fundamentals, you really don't know the health or strength of a business, and the SEC mandates that be reported quarterly by public companies, just to give investors insight and a source of truth that the companies are held to the fire. They're liable to make sure that they are reporting fundamentals accurately. They get a lot of trouble if they're not accurate, and it serves as a starting point for basically any research, any analysis into the investing world. So you've got to have fundamentals. The next thing that I would recommend having in your platform, and we get asked for this all the time, are forward estimates of earnings. And these are important because they're kind of magical. If the idea behind them is magical, they don't always work. But the idea is that you need to be able to know, in order to decide if something is a good investment, where are the earnings of that company heading? Are they about to go out of business? Maybe they're going to get regulated into non-existence. And so if we know that there's a cliff coming for their earnings, well, that definitely influences our analysis of that company as a potential investment. Companies that we're partnered with, like Zacks, provide they poll analysts, professionals, people who do investment work for a living, and they get information and reports from them, asking them, where are the earnings heading for this company? Up, down, flat? And there's a lot of different flavors that can be provided, and we can provide that data. Lots of other companies can provide that data as well, notably TipRanks. They provide these forward estimates of earnings, and if you know anything about finance, you've had any kind of training, you'll know that the most popular way, or one of the most popular ways to value traditionally a stock is called a discounted cash flow analysis, DCF, and that requires some estimate of forward earnings. Your users are going to guess at that. They're trying to figure out, do the research, where that stock is heading based on its earnings, but usually you want to provide them with some professional estimates as well. So another important data set for startups in the portfolio analysis or research space, definitely want to have estimates. The next one, and this goes probably beyond the world of investing in finance, is news about companies. This one is incredibly important because news is highly engaging, it's relevant, it updates all the time, and it gives people a reason to come to your platform and get that secret sauce and all this other research that you can provide them, and it gives them a reason to come more often. Like, was there a press release about a company in my portfolio? What about this company that I'm researching that I might want to buy, do they have any recently released news that I could read and maybe learn more about that investment? And news is tricky to provide from a financial standpoint. And the main reason that news is tricky is that when a news story breaks, it's not always tagged conveniently with the ticker that the news story is about, with the security identifier that your users are using to search. Say they're looking for Apple. Well, Apple has lots of different tickers, AAPL, but it also trades under different tickers internationally. And if a news story breaks, they're probably going to write APPLE, the word. And so filtering news to get the right news about that stock is challenging, and Intrinio, again, works with partners like Naviga that provide that data and allow you to, on the back end, say, give me only news about companies in this user's portfolio, so that they have something to read and they don't have to go out and scour the internet looking for information. When that information is released basically anywhere, we can alert them and send that to them, and that creates all kinds of beautiful push notifications and alerts that can be created around news. And news goes beyond finance. I mean, everybody, pretty much every fintech platform has some good use for news. So the last thing I'll mention then is options data. And it's not essential if you're not an options platform, but if you're running a business and you want to make money, options is a good way to do it for businesses. We've mentioned this before. Quite a bit of Robinhood's revenue comes from options because they allow you to trade stocks for free. And why do we know that? Because we can read Robinhood's financial statements and we can read their disclosures, which is part of that fundamental data. We know that they're making a lot of money off of options, and options is extremely popular and growing among retail traders. So if you're looking for a way to monetize your platform, options can be a real moneymaker. So in my opinion, some of the most fundamental data sets for fintech startups in the financial analysis and research space are stock prices and other market data, possibly crypto, fundamentals, estimates of earnings, news, and options. My Intrinio guest today is Alec Isaac. He's a sales engineer at Intrinio. Welcome to the podcast, Alec.
Hi, Andrew. Thank you for having me here.
Yeah, our pleasure. Why don't you get us started and just tell us about your personal background and how you came to work at Intrinio?
So, personal background, I had just finished up law school, and during law school, I was dabbling with data, finance, etc., really just trying to see what I enjoyed outside of law. And that's to say, heard from a great person in there, there's no better place to find what you want to do than going to law school. No one's going to give you grief for going to law school, right? Oh, he's in law school. So I pretty much went there, found what I wanted to do, and I ended up linking up with Intrinio after graduation as a sales engineer.
You came actually with a legal background, and now you're a sales engineer. For our audience who might not even really know what a sales engineer is, can you talk a little bit about what exactly that is for you?
Sales engineer, really, I mean, there's like solutions engineer I've been labeled as, etc. It's just a jack of all and a master of maybe one if you're lucky. But really, it's melding the DevOps, dev, and sales and customer success all into one role and just trying to balance everything equally, making sure your customers are happy, they're able to get going on their foot, relaying those requirements back to dev of what might make their lives easier. That kind of follows in with customer success, really. So it's just it's a feedback loop of sorts, right? Where you're getting to work with the customer, getting that feedback. Then you're trying to help them and say, oh, well, while I'm helping you, I think our engineering team can do X, Y, and Z. That'll help a lot of people, right? So it's trying to take one person's issue, fixing it, and then having it generalized across a lot of people. So just really trying to help people.
So you're doing the sales engineer role, but you're also pulling insights out from what those prospects or customers are asking for to make the whole platform better.
Absolutely. That's what I really love about it because it kind of then molds into that product space where it's like, hey, we could use this new feature. Hey, we could use this new data, right? And you get that great kind of feel for what your customers want, what the market wants. And that's just really our job at Intrinio, is just providing that data, allowing people to really explore, experiment, and make the best they can.
So Intrinio is a financial data company. So like there's sales engineers at all kinds of companies, but like can you tell people like an example of like say a customer comes to Intrinio and they're looking for data, like what are the kinds of things that you would help them with? Like how do you help them get access to that data?
So with depending on what data they're looking at, let's say it's fundamental, it's usually around like, okay, how can I ingest your data? How can I make sure it's fresh for my users? How do I navigate, the API, any sort of limitations on it? Really just showing them the best practices to embed it on their site, get it in front of their users, and allow their users to have a great experience on their site. That's really it at the end of the day, is just making sure that end user has a good experience and using our own data.
So you're connecting with developers primarily who are going to test or use the product, and so they've got probably like more technical questions than the sales team can handle sometimes.
That sounds about right. Usually it runs the gamut of the spectrum of like, we get devs on there who, will whoosh over my head sometimes, right? They're using a stack I'm not familiar with. And that's when it's nice to be able to kind of break it down for the engineers, like when I have questions, right? Because I'm not perfect, I'm far from it, right? So it's like, okay, let me get these nice and lined up for our engineering team, see what their response is, and then I'll facilitate that moving forward. But really, it's kind of that first line of defense where it's like, oh, they have these questions. I've heard that question, 100 times, right? And so I can definitely help you there. And then also, if it's something where I'm like, maybe this is something we can fix internally, let's not hear it anymore. We'll make that change in our back end, right? And then we can serve it up and say, oh, we won't get that question anymore, right? Because it's just been fixed or, adjusted per se.
Yeah, you've got to use a lot of judgment, I think, to say like this is something that I can fix for this customer, or maybe it's something we can't do, or maybe this is something that I can fix for all the customers. So you're kind of sitting in between the customer and the dev team to make those choices to help everybody keep moving.
Exactly. It's like the guy from Office Space, right? I'm just a people person, I take the requirements from the customers and I go to the engineers, that's really it. In this case, no. So I feel a little bit higher than him, but yeah, I guess I do those by myself, right? But I don't actually walk, I still thankfully we're remote, so it's just like boop boop. But yeah, that's really how I feel like sometimes.
Yeah. You're on a lot of calls with customers? Like, is that how your primary mode of communicating was? Like, the sales team brings you in, and like, when in the sales process do they bring you in to talk to that customer? Is it like in the middle, the beginning, the end, all the above?
All of the above, probably. It really depends on how that process is moving, where their questions are. Like they know this is the data they want. They just want to be sure they can use it in XYZ way. I'll definitely get on a call with them. Calls are always easier than emails in every sense, right? Like emails are great for following up, but I love to be on a call because that's where I can take down the notes, get everything going, and say, okay, here's what they need. We can do X, Y, and Z. Let me see about Q. That's not the order, but like let's just balance it around. And so that's really where I come in. Whenever the sales needs me, just they drop me a line and we go from there.
Yeah. And like, so these customers that you talk to, they want to connect to data, right? They're going to pull it in on their end. How do they connect? Like, what are the access methods that you see most customers preferring?
Typically, it's through our API. It's just straight, just requests through those endpoints. We do get a lot of use with the SDKs. JavaScript's actually a really popular one, our JavaScript SDK, more so than Python, surprisingly, even though a lot of our clients are using Python. But what's really kind of started taking hold is Snowflake. We have that Snowflake database access, and so it's just a lot of these clients who are doing big time queries will just be able to pull it right from there. I don't have to worry about rate limits. Don't have to worry about anything. The database just updated from us, so I think that's really kind of catching on where people are just pulling straight from Snowflake.
Yeah, it's like the easiest thing for a developer. Like, if you can give them API access, great. If you can give them SQL queries against the database directly, that's even better. Do you think that that kind of direct database connection is gonna like spread? Like, people, I've heard people asking for Amazon access, like through an S3 bucket. Do you think that's the way data will be delivered in the future?
I think so. I think it's already super popular. As more and more financial data keeps coming out, all these new sources, right? It's just going to keep getting bigger and bigger and bigger. You're seeing all these data warehouses coming up, these data lakes. I think that's where it's going to end up is people are just going to dump it into some sort of data, large data storage, and just pull directly from there. That way they can really kind of make those queries as complex or as simple as they want. They're not bound by an API, even though we have so many, it's always nice to kind of have that flexibility and the ability just to, let us do the updating. It's always going to be updated, pulled directly from there. That's pretty easy going.
Yeah, it's funny because 5, 6 years ago, I was so excited about API delivery. I was like, "Yep, this is the way of the future." And then people would take it via API and then put it back in the cloud. So they would like pull it down and get like a CSV, put it in the exact same format it is in our database, and just move it to their database. And so I agree. I think that people are just going to kind of cut out the API layer unless it's streaming. I mean, that seems to be the case.
Yeah, and I mean, it'll always be there for like quick jobs, like if you just need just these forms of data, right? Like you don't need to go through the entire piece of making your own queries and everything. You're just gonna, hook up the API and away we go, right? So I think it's always in a matter of like how complex does the user want to get, right?
Do you think even before that 10, 15 years ago, it was all FTP transfers, which are, you know, do you see anybody asking for FTP transfer anymore? Is that something that people ask for?
We don't, thankfully. I mean, CSV is still popular. I'm seeing Excel kind of slowly but surely coming around, especially younger clients, et cetera, right? They're looking for the APIs because they're just going to be able to manipulate it, with Python, et cetera, right? I'm seeing that kind of trend going around, but Excel is so powerful, it's so strong and so prevalent, right? Like I think over time, like the FTP will kind of disappear, the Excel will kind of really go away, but still probably a long way from there just because it's so prevalent.
Yeah. Yeah, it's going to take a lot of time. There's a lot of inertia behind those delivery mechanisms. So you do think more and more people are learning Python or like other coding languages and kind of replacing that Excel user? Do you think that's what's happening?
I think so. I think it'll always have a place because it's great to kind of display and get a feel for the data. But I mean, like I said, I couldn't see it ever really going away. But I know like Google Sheets, Google, all of that's kind of like popping up more and more, right? So just different flavors of the same. But I do see a lot of our users really kind of cranking it through Python, data frames, just really gives you a lot more, once again, flexibility to manipulate. And I think it's that flexibility that people are enjoying having. Too much gets you in trouble, but it's nice when you can find, 10 different ways to do a thing.
Yeah. Well, let's talk a little bit about options data for a second. So, like, if you read the newspaper, you read about options recently. It's just been a huge craze of talking about a lot of retail traders getting into options. Do you field a lot of questions from people looking for options data?
We do. That's honestly probably been one of the more popular data points people are looking for is that options data and all types, flavors. This is from retail users looking to pull end of day to track things, and then also like institutional grade where they're looking for that granular snapshot. And so options has definitely taken its hold on the public and everyone. And even in the markets, it seems like, the tail is wagging the dog sometimes, where options will rip, underlying has to kind of catch up, etc. It's crazy time.
Yeah. What are the challenges for people that are trying to get that data? I mean, it's a very different animal than equities data, I'm sure. So like, how do you coach somebody, or like, what kind of questions do they have? What are the stumbling blocks when you're trying to pull down a data set like that?
The really the big ones are you can kind of they'll want to see the Greeks and the volatility with every piece. Some providers out there will only just have that kind of like end of day price, and that's up to the user then to kind of use Black-Scholes, calculate all of that out. That's where I think a lot of people breathe a sigh of relief with ours, where they see they got the Greeks, the IV, they got the open high lows close, all of that data kind of coming through. And we offer it not only in the API, but the WebSocket. And so people who are really trying to not so much high frequency, but a little more, they want that constant flow. They see that and they're like, wow, that's a lot of data. I mean, it's it's a huge market, million plus, million and a half contracts a day moving through. Um, and for them to try and capture that data and make sense of it, we provide it in a great format. So I think that's really where users are happy.
Yeah. So the challenges that they brought to you probably in the past were like, hey, we want you to calculate implied volatility. We, the Greeks, like these are those that feedback loop you were talking about earlier, like that you told the development team, like, hey, this is something we can take off the plate of these users and make their life a little bit easier.
Exactly, exactly. That was part of it. And the unusual options, that's our latest feed. I mean, that's just really kind of blown up where we've gotten a lot of requests for, can we track it? Can you track it and deliver it to us in API? And we ended up, we were able to kind of track it, build it, and throw it through an API. And it's really kind of taken off where those users who wanted that ability to track large trades that are going on in the markets now have it at a click of a button. So very easy to do.
Can you talk a little bit more about unusual options? I bet. I mean, 6 months ago, I had no clue what unusual options were. I bet a lot of people haven't heard of it before. Like, what is that? What is that? What's unusual about it?
What's unusual really is just the sizing. So, the main two you'll see are the blocks and the sweeps. Blocks is just those very large trades in one unit, like a block order going through the system. And a sweep is someone's throwing an order against every option exchange out there, and they're trying to get filled on every one possible up to X dollar amount. And so that'll really kind of, when you pick that up, it's like, okay, this person, depending on where it's asked, bid, ask, sell, buy, etc. You can see, okay, they're bullish or they're bearish on this kind of movement. You get a little insight to it, but it's really great as a supplementary source because you really never know what direction they're going in, right? Are they hedging a play? Are they, adding on to a play? It's kind of it's great as a starting point, like a great base. Like, okay, there's a lot of unusual option here. Like, let me look into it. And that's kind of what we always tell, when people are looking for it. Like, look, we don't predict the future, but this data is a great place to start. Like get you going there, get a feel for it, and make those decisions.
Yeah. So, like, you're dealing with businesses that are coming looking for data, like options data or market data or fundamentals or whatever it happens to be. They're trying to get connected, trying to get the data, and then that's not the end goal for them. It's not just to like get a hold of the data. They're going to go off and do something else with it, right? So, like, what kind of stuff are your customers trying to achieve? Like, what are you enabling for them?
For the most part, especially with the fintech companies, it's enabling them to, everyone's trying to assist the retail trader now and get them on the same level, same ball field as everyone else in the markets, right? And so for them, it's really like we come across some very novel ideas of, hey, like the unusual options, right? This is a very confusing sphere, right? We're going to take your data and we're going to break it down in these easily digestible kind of content bites, right? Where they'll break through everything I just said into even further detail and really help their users understand, like, here's what this data is used for, here's what X is used for, right? Just really allowing them to kind of look through all this data and see, like, okay, I should be doing X, Y, or Z with it. That's really at the end of the day, it's they're making it so that other people can make the best investment decisions possible.
That makes a lot of sense. What and what are the what are these retail traders competing against? I mean, it's a professional trader who's just got a huge budget for some custom built terminal. Is that who they're up against, really?
I mean, at the end of the day, absolutely. It's really just you're going up against millions, billions sometimes in funding, right? And that research, you have to kind of play in your ballpark. And I think for myself as an individual user, the only thing I have going for me is I don't have a mandate. I don't need to stick to, growth, value, et cetera, momentum. I can choose what's best for myself. And so I have that flexibility, which a lot of these larger institutions, right, they've pegged themselves as we are a value fund. So they might see these growth stocks ripping, but like their mandate, they have to stick with value. Or, the 13F, the best ideas, that kind of piece where they have some great ideas, they have some great plays, but they have once again they have to do right by their own kind of investors, and they can't put all their eggs in one basket. Where you and I, right, we can get a little more flexible with that. So I think that's really the biggest edge that an individual has right now is just the flexibility and a long time horizon. I mean, I hope.
Yes, I hope so too. And now more tools, like because 10 years ago you were just on your own, right? You were just reading Yahoo Finance or something, and you didn't have any choice of tools. And so now you're here helping all these different developers build those tools so that you can kind of give them even a fighting chance.
Exactly. That's it at the end of the day. Just really a fighting chance to feel comfortable with the decisions they're making. I think that's the most important thing ever, right? Where you're not just kind of yeah, like 10 years ago, it's like, oh, I guess I'll pop this and like paying $8 to trade it and you're like, all right, well, I hope it works. Now it's just like, okay, I've read X, Y, and Z, I've seen, all these comments, these analyst opinions, et cetera, right? I'm gonna dip my toes.
Right. Yeah, you've got a lot more information, and it doesn't cost you as much. It's funny because that was only a year ago that all the brokerages went to no fee trading. And do you think I think that no fee trading has really actually driven options because the brokerages still can charge for options trading, or that's a big value add where they can make their money. I think Robinhood makes like 60% of their money off of options trading. Is that something you've noticed from brokerages that are trying to add that functionality as a way to, because they can't charge for equities trading, everybody would go somewhere else. Do you think that's another reason why options are becoming so popular is that brokerages are pushing for a revenue source?
Absolutely. I think, I mean, they're making it more prevalent. I know, like most brokerages, yeah, it's like 60 cents a trade on them, right? So, like, they're really kind of ramping it up. That's where they're making their money. And also, just, you can get that leverage, right? Where why play the lotto? Why do this, right? When you can just, throw a few bucks or more, et cetera, right? On some options, out of the money options. That's really kind of where it's at, where it almost seems like when everyone was locked up, it was entertainment, right? It was like, oh, okay, like I don't need to turn on this Netflix series. I can just, turn on Robinhood and then just see like how is today gonna be a good one or am I eating ramen at the end of the day? Like I think that was what it came down to was just like the entertainment, right? You're not spending your money at the movies. So I got 20 bucks, whatever. Like let's throw it out there.
Yeah, it's like sports betting. Yeah, it's a replacement.
Yeah, but there's no sports. That's what I'm saying. So you're either betting on squirrels racing, or you're like, I guess I'll go, try my hand at some options.
Yeah, that's all. So, you do you do a lot of do you have a lot of projects going on outside of being a sales engineer for Intrinio? Like, are you working on any of your own personal coding projects you could tell us about right now?
Always something in the fire there. Right now, it's more on 13Fs. So I'm always like, I'm very fascinated with like kind of like I was saying earlier, like the best ideas of who's playing what and just trying to back test that out. I know we have our own 13F feed, which makes it great. So I can just kind of pull in all that data from institutionals and see like, okay, they moved out of this position, they moved out of here, right? It's like a great starting spot for me, right? It's like chasing steam per se, right? It's like, okay, it's good enough for these guys and they have all these resources, right? Like, let me do a little deep dive. So it's kind of a little cheating per se, right? But I'm just trying to get like a screener per se. So that's really one of them with the finance side.
The 13F is an SEC filing that shows institutional trading, like what the big fish are buying, and instead of if you can't, it's like if you can't beat them, join them type strategy. Like they have way more money, way more research, bigger team. So let's see what they're doing. Let's see what they're thinking, and use that as a starting point for your own trading strategy. And you're screening through that, saying like, okay, which securities are getting the action from the big fish. Is that your strategy?
Yeah, absolutely. Just kind of like top 10 across the board. And, there's a caveat with that always of like those are pretty well delayed by the time they have to file. And so you have to ask yourself, like, they might not even hold this anymore, right? Like this might have been theirs. So I try and stick with firms which have that like kind of longer term horizon of investing. And so that's really it. Like you'll look at some like high frequency trading firms on there, right? And they'll put thousands of securities and they hold, they're not there anymore, right? Like those are just gone. But like longer term, like Berkshire, you can tell like, okay, he's going to have a long-term outlook there. This is something I can take into account when I'm screening these firms. And so just always interested to see what they do. Especially when there's a small position, like a very small stock, it's like this is something to take note of, because they'll crush themselves getting out of it if they're wrong. So that's always what I like to kind of like really look into.
More interesting than being in the law.
I did enjoy the law, but I wanted to try some other things first. I had a lot of these passions come out, and I found, I was looking more into finance, looking more into developing more than I was, into law. And so I was like, okay, this is a sign that, I need to go this path. I need to really try this out. But I say that I really enjoyed law school. I loved my teachers, etc., like everyone I went there with. So it's a great experience, and I'll be thankful for it. But yeah, here we are. We got to try some new things.
Well, we're thankful for you. Thank you for coming on the podcast. It was really fun talking to you, Alec.
Absolutely, absolutely, my pleasure, and thank you for having me. This is it's been a treat.
Thank you for joining me for this episode of FinTech What the Heck. Thanks to our sponsor, Intrinio, a financial data partner for innovators in finance. You can learn more at intrinio.com. I'm Andrew Carpenter, and I'll see you next time for more of what's new in FinTech.